Hello and welcome. I'm Sriyash Maheshwari and you are watching Last Tick here on News9, where we break down the day's action on the Lal Street. And Indian markets now, they have extended their winning streak to 3 sessions now, with Nifty closing at its highest levels since early February. Nifty started the day, above the 21,900 mark, but we saw some bit of a selling pressure in the morning trade itself, where the index tested a support of 21,800. And from there on, we were pretty much trading in a tight range of about 50 points, and that is on Nifty from about 21,850 to 21,900 mark. However, by the afternoon trade, the index was able to move past the 21,900 mark, and it ultimately settled above it as well. At close, Nifty was up 0.3% at 21,910 mark. Sensex also gained 0.37%, and it managed to close above the 72,000 levels. The broader markets, however, they have fared better than the headliners once again, and they have outperformed Nifty actually on this for the second day on the trot. The mid cap index ended with gains of over 1% at 48,800 levels, and the index has now retraced 61.8% of the fall from record high to Tuesday's low. The small cap index has in fact even better, adding 1.32% to settle above the 16,100 mark. The small cap index is also just about a stone throw away from the 61.8% retracement level. Bulls, I think, would also like to see the fall in volatility. India VIX ended with a cut of about 1.3% at 15.23 levels, which is the lowest level for India VIX since early February. And if we talk about today's price action, the price surge was led by banks. In fact, 44% of all the gains for Nifty came from just 2 stocks, HDFC Bank and SBI. But if you look at the Nifty banking pack on the whole, Nifty Bank surged by about 0.68% and even managed to close above 46,000, and 46,000 is crucial because that is the level the index has struggled with in the recent past. In fact, if you look at today's close, this is the highest close for the index, for the banking index, in nearly a month. So perhaps going forward, one needs to keep an eye out for that. And if we talk about this rally that's playing out in the banking stocks, it's the PSU banks that are leading the charge. All the constituent stocks of PSU banks surged in today's trade. The index on the whole ended about 3% higher, and stocks, some of them surged as much as 6.5%. Among other sectors, auto stocks also provided support today, and the gains in Nifty Auto, which was about 1.25%, was largely led by Mahindra and Mahindra. The stock of Mahindra and Mahindra surged almost 7% today to close at a record high after brokerages hiked target price on the stock post robust Q3 numbers. On the other side, FMCG pack, the pharma stocks and some of the media stocks were under pressure. But to understand the way forward and understand what cues are important to track for us going forward, let's also bring on board Mr. Amit Gupta of Fintrek Capital. Thank you for joining us here on News9, Amit. Always a pleasure seeing you. And a very strong recovery the markets have been able to stage in the last 3 sessions. Nifty has risen by about 400 points from the weekly low. We are back in the vicinity of 22,000. Safe to say that this correction that we have seen in the past few sessions, is that over?
Yeah, hi Suyesh, thank you for having me. So I believe the markets are pretty much range bound. There is a strong resistance around 22,100, and then there is a support at around 21,500, 600 kind of a levels. The market has not been able to close below 21,630, which is sort of a 21-day moving average. So I would say it's still range bound, and there are stock specific triggers. Obviously now, as we speak today, the earnings season is also coming to an end. So now, it will be more like headlines driven rather than earnings driven from here. But till, the market does not break out on any side, I think this sideways movement can continue for some more time.
All right, and what will be the essential triggers that one needs to keep an eye out for? Because we have the policy meeting from both RBI as well as in the US is behind us, budget is behind us, earning season is pretty much over. What are the cues that you will be tracking?
Yeah, right. So I think there is still a lot of political developments which would be happening both in US and India. As in probably by the month end, we'll hear about the dates also for the general elections. In US also, what we are seeing is that bond yields have again rallied back to 4.3% from 3.85. So that is also will cause a sentiment. As of now, I mean, there is no big trigger as such, looking like. But usually when the markets are complacent, then you get a small trigger, and the markets move very, very fast in either of the direction. There are worries, especially what is happening with the Red Sea and the shipping costs going up, which would add to the inflation. In fact, that has led the Fed also to postpone their rate cuts, which might not happen now in March or even May. So I think there is a change in a little bit of the sentiment as far as the rate cycle is concerned, and I think that is getting priced in.
All right, and of course, the narrative as far as the rate cuts are concerned, when will it happen is a big question, of course. And I think that will have a lot of bearing on the 10-year yields in the US, and they are inching back up once again. They are somewhere on the 4.3% mark, as you rightly pointed out. But can we get back to that 5% plus levels that we had seen in October, November?
That seems a little difficult at this point of time. I think market will not worry too much till it's about 4.4, even 4.5. I think it should be okay. But once it starts sort of staying above 4.5%, and the inflation, what we saw the inflation data coming from US earlier in the week, if that stays hot, then the expectations of a rate cut also gets pushed even beyond June. So as of yesterday close, the June was about 60-70% probability of a rate cut. But if inflation stays strong, then you are going to see the probabilities going even ahead. And in that case, you can even see some sort of movement towards 4.8, 4.85.
All right, and shifting focus back to our local markets. After this Monday's and last Friday's correction, PSU stocks have bounced back in a big way. The BSE PSU index has not only recovered what was lost, but has rallied on top of it. And the brokerage, I was reading a lot of these reports from brokerages, they are divided on whether the PSU stocks can continue this tremendous run that they have been on. What's your take on this entire issue of the rally in PSU stocks, sir?
So when we talk about PSU stocks, I would keep into two buckets. One is the PSU banks, and another is the PSUs in other sectors. As far as these other sectors are concerned, whether it is defense, railways, renewables, clean energy, I think in that space, clearly stocks have run up a lot, and the valuations are definitely not in favor for investors to get in. So anybody who, like us, who follows a certain valuation framework, if you want to buy cheap valuations, I think that moment is pretty much gone. It was there about 18 to 24 months ago, but now with the strong rally and with execution and payments to come, that needs to be seen how much they comes, and we are heading into an election season where the capex will be really slow. So a lot of these sectors are, I think, overvalued, especially in defense and railways. So we are not looking at those positions. In fact, in the last couple of months, we have actually sold out all the PSU names which are there in these sectors. But as far as the PSU banks is concerned, I think there could be some potential upside still left. They are experiencing a re-rating due to exceptionally low credit costs, better asset quality as compared to, let's say, private banks. They have resulted in higher PAT growth compared to private banks. Their profits are driven by reduced credit costs, robust AUM growth, and the perception has changed. So all these PSU banks, were very under-owned 18 to 24 months ago. And with the significant earnings improvement coming even in the December quarter as compared to, let's say, private banks, that numbers has sort of led to again a very sharp rally in the past few sessions. So I think the valuation gap has also now sort of cramped a little bit. Private banks used to trade at 2.5 to 2.8, 3 times books, whereas some of these PSU banks were trading at less than a book. Now I think that valuation gap has converged a little bit, and that's why you're seeing a lot of PSU banks outperforming the benchmark indices and also the private banks.
But are the valuations looking attractive? Because of course the PSU banks have run up quite significantly. So a lot of them have turned multi-baggers, and you put it out there that the valuations were rather cheap and they were under-owned. But now, as things stand, how are they, valuations wise looking?
No, valuation wise, I think they are still a little cheaper, especially the top 4, 5 banks in the PSU space. They are still cheaper than some of these private banks. So there can be a valuation, converging call which is happening. I won't add, into my existing positions, but I think whatever positions we have, we like to stay in it for some more times. What is also happening is that these PSU banks are actually better placed as far as the liquidities are concerned as compared to the private banks.
Right.
The recent MPC decisions also on the withdrawal of accommodation to contain inflation, that is sort of unfavorable for the private banks. But the PSU banks are actually much more comfortably placed in their liquidity. Their source of funding through the borrowings is there, the surplus liquidity is there. I think LCR is about 125, 140% on an average for these PSU banks. So I think in short terms, they look a better bet than the private banks, and I think some sort of upside can also be expected out of that. The one word of caution is that the bottom rung of PSU banks, I think there is a bubble there because these are very low float stocks where about 1.5, 2%, or sometimes even 4, 5% float is there. So I
Right.
think there is a sort of a bubble which is happening. But the top 4, 5 PSU banks, I think one should be safe there.
And since the float is so low, are you concerned about the disinvestment drive that the government will perhaps go on after the elections? Because the SEBI has the rules. It has a timeline of about, I think, a couple of years to meet the minimum public shareholding norms. And some of these public sector banks and some of the other PSU stocks, the government holding over there is over 90%.
Yeah, so in the case of PSUs, not just PSU banks, even some of the PSCs also, the minimum shareholding, the minimum public shareholding, tends, that deadlines always tend to get pushed ahead with SEBI's approval. So what we have seen is that a lot of these companies are not able to meet up their MPS limits, which is a concern as far as divestment is concerned. But there is no fixed timeline to it. We don't know. I mean, the divestment for a couple of PSU banks we have been hearing the headlines for over 3 years now, and nothing has happened. I think even after the elections, it will be very difficult to get sellers or buyers for these PSU banks at these valuations. The valuations really need to come down for anyone to get interested. I don't think a bank which has got more market cap than any of the top 3 PSU banks,
Right.
or rather number 2, 3, 4. I don't think anybody will be interested. So there could be a crash in the valuations post the elections.
Wow, there could be a crash in the valuations of some of the low float PSU banks because of the government's disinvestment drive to meet the minimum public shareholding norms. That's the word coming in from Amit Gupta. So always a pleasure speaking to you. Thank you for joining us here on News9.
Thank you, Suyesh. Thank you for having me.
With that, it's a wrap on this edition of Last Stick. Keep watching News9.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50